What's up, YouTube? It's your boy JB. We don't save, we invest. I'm going to talk about some great stocks to buy now that are on sale and stocks that are taking off. I'm also going to discuss what earnings mean and what's earning results and how that has a big, it's a big factor into the stock market, whether it's going to shift up or down. If they're beating quarters and beating earnings reports and EPSs and things of that nature. Subscribe to the channel, hit the like button. It's your boy JB. Don't forget to subscribe. I love y'all. Now everybody knows that been rocking with me and knows that I'm always a fan. I'm always bullish on Apple. Apple, ticker symbol AAPL, is a beast. It's going to be amazing for this technology sector. 5G coming out, the Apple phones, the iPods, the Apple computers, everything. You already know Apple is going to the moon. So now Apple, right? It's been on a tear recently. And this is why I love Apple, because this is like a slow, steady state stock. So it's like working out. When you want a slow, steady state, Apple's the same way. You be patient with Apple and it can net you millions. Apple produced many millionaires over time. You already know I did an investment calculator. If you look out one of my previous videos, and you will find out how amazing Apple is and what they have to bring to the table. So now before we get into these penny stocks, we're going to talk about Apple. They're currently sitting at 136. They're up 3% for the day. Check this out. Apple shares are trading higher after Morgan Stanley maintained its rating and raised its price target to 152 per share. So their price target is raised up. We already know because Apple has earnings next week. And we're going to talk about what earnings is and how important it is for you as an investor to understand earnings reports and the technical part about it and numbers and things in that nature. Now, if we look here at Apple, the last 5 days, look, they were down in the 128, 126 range. Now it's up to 136. You see that? So what's that telling us? That it's on its way up. It was trading sideways for so long, or meaning consolidation, and now it's finally popping. That's what the stock markets do. They trade sideways and pop. Don't forget, hills, valleys. They got to go up and down, right? What goes up must come down, right? So I want to show you guys now tip ranks. These guys have Apple a high of 160, the average of 133, and a low of 80. How would I play this? Because you have to know how to play these entry points, right? The strike price or the buy price. When I would buy Apple right now, because you know what? Apple is always a big time player. They're always going to produce you money. They have a dividend. They pay out 82 cents per share annually. So you know you're guaranteed with an amazing company, a beast, a juggernaut. So I would invest $200 in Apple right now. Boom. Then after earnings, after a couple of days, it'll go up and then it'll tend to decrease in the share price. Put another 200. Boom. Then you wait to another great entry point that you feel comfortable at a price that you can want to put in. Then you put your last 200. That's how I would play $600. I don't have to go over about Apple and what they bring to the table because everybody knows that the apple is one of the healthiest fruits. So get a piece of Apple, guys. Now, the next company we're going to talk about is the Very Good Food Company. Everybody knows. You can check out my videos. It's a penny stock. It's a stock that's going to go through the moon. It's a stock that's going to go through the plant-based moon. And it's a company that's on sale right now, currently, today. It's currently sitting at $4.65. If we go back 5 days, it was up to $5.38, so it's down, right? Now, this is good because it's a good entry point for you right now. This is a great time to get in this company. So if we go back a month, it was down to $3.57 in January 4th. And I did a video and talked about that a while ago and said, get in now. Buy this stock now. It's a OTC company. It's a Vancouver, Canada company. They're also talking about expansion and growing in Vancouver and in the US, because what they want to do is move and start executing business here in the US. We know that the US is a big time player in the world, right? So they also are going to navigate and shift to the dairy sector, plant-based dairy. That's huge, guys. A lot of people don't want to drink cow milk and stuff like that. They go for the almond milk, the soy milk. So imagine incorporating plant-based dairy milk. That's amazing. And the revenue that it could generate monthly, annually, year over year. Now, the stock price I have for Very Good Food Company, according to the Wallet Investor, the price is currently $5.67. In 1 year, it's projected to go up to $19.59. Now, what's this mean? This stock will 3x from its current price. You will have a 300% return on your money on the Very Good Food Company. That is actually a very good food company. So do your due diligence. I'm not your advisor. You're your own advisor, but make sure you study the results and things, reports and things in the company so you know what you're buying into. You don't want to buy into something that you don't believe in. You don't want to buy a pair of sneakers that you think they are right. No, you want to buy a pair of sneakers, or you want to buy a brand of sneaker that you know is going to produce you the great results, whether it's for working out, whether it's for running, whatever it is, walking. It's the same thing with a company. Now, the last company we're going to talk about is Titan Medical. Ticker symbol TMDI. And they are on a great discount today. They're down 15%. That's not nothing bad, guys. This is great. When something's down, it's not always bad news. But you got to do your own research, though. Titan Medical is a company that is research and development stage company focusing on design, development, and commercialization of computer assisted robotic surgical technologies for application in minimally invasive surgery. The company is developing the Sport Surgical System, a single port robotic surgical system that comprises a surgeon controlled patient cart, which includes a 3D high definition vision system and multi-articulating instruments for performing MIS procedures. A workstation for the surgeon will be provided. Guys, imagine this. A robotic doing your surgery, right? The doctor doesn't have to get close to you because, like with COVID stuff going on, that decreases sickness, that decreases the chances of sickness, that keeps the patient actually more in a clean environment because they're not being touched by a human. They're not being cut open with. So think about all the positive variables and all the great benefits that come with this. Titan Medical is a company that I would buy as, the shifting in the new implementation of different companies start to come in. If I were you, I would invest right now. This company is also based out of Toronto. So if we look here at the chart, 52-week range, $2.85. It's gone up a lot. Look, it was trading at 26 cents back in May. So it's already produced over 458% already. So this forecast is set to explode on this stock company. Do your due diligence. It's a penny stock. Subscribe to the channel. It's your boy JB. I love you guys. Now we're going to get into what their earnings report is. All right. I love you. So guys, this is our learning of the day. And our learning of the day word is earnings reports. Earnings reports include items such as net income, earnings per share, earnings from continuing operations, and net sales. By analyzing quarterly earnings reports, investors know what they're buying into. They know what the company's results are, what they're bringing back for us to see, whether they're doing good or bad. And then we can gauge the financial health of the company and determine whether it deserves our investments to continue or for us to sell off. Now, I'm going to show you right here what our earnings report is. And don't forget that the most important thing for earnings reports is the EPS, or earnings per share. The earnings per share means a lot. If we know that the earnings per share has risen, that shows tremendous growth of the company. And if earnings per share have not beat expectations, then we have to look and see what happened. We know earnings per share was probably crazy for 2020 because of COVID, but the stock market went down and then boom, we had a tremendous upside, tremendous growth, and people made a lot of money. But this is the thing though. Now, moving forward in 2021 and beyond, we have to analyze more and make sure we're reading balance sheets, earning reports, knowing who the CEOs are, and things of that nature. So that's what I have for you today. It's your boy JB. We don't save. Subscribe to the channel below, and don't forget to hit a notification bell and hit the like button for the algorithm. So I love you. Have a great day. Enjoy your day. I'm out.